Okay, expenses are deductible. But what is an expense exactly? This seems like an obvious answer, but truthfully, the term has two different meanings, one that you hear every day in the world, and the other that entrepreneurs use. We kind of traditionally know the term expenses as any bill or cost that comes out of our checking account. We've just traditionally defined expenses as bills. But for accounting and taxes, an expense is only those bills that do not retain money value beyond the period that you're measuring. Expenses that don't have value after that period are called tax deductible. So, two things here. One, the period that we're going to always refer to is whatever calendar year we happen to be in, because the IRS uses that period to decide what kind of taxes we owe for the year. So, our period is always January 1st to December 31st. And here are some examples of expenses that would qualify as deductible because they do not retain value after December 31st. So, if you had a power bill that was paid for in September, well, on December 31st, there's really no value anymore in that. The next year, you're not going to be able to still have power left over from the September bill that you paid. Internet service, phone bills, mileage that you drove and paid for in gas, and monthly insurance payment, they have no value after December 31st if they were used earlier in the year. So, therefore, those are accounting expenses and therefore deductible expenses. Maybe you went to a songwriting clinic in Colorado. Now, it has emotional value and skills value to it, but you couldn't sell that experience to someone else, so it has no value anymore as far as money goes on December 31st. So here's some examples of things that aren't expenses so you can kind of compare it. Let's say you bought a guitar in August. Well, on December 31st, if that guitar is still around and didn't get destroyed in some fire or something like that, then that guitar still has value because you could technically sell it to somebody. A van or a trailer you may have bought earlier in the year in maybe January still has value after December 31st if you still have it. New XLR cables retain value after December 31st, for example, because you technically could sell these cables to somebody. Somebody would buy them. It doesn't matter what they'd buy them for or how much they'd spend. It just matters that they have some value to them. And here's a little bit further of an example. Guitar strings that maybe you purchased in August that are used and then thrown away before December 31st are expenses. But if you bought some in August and they're still sitting on the shelf in the boxes, on December 31st, those strings still have value. Someone would buy them from you. So once again, expenses that are deductible off your taxes do not retain any monetary value after the relevant period, and that relevant period for us is always the calendar year, January 1st to December 31st. Now, some of you are thinking right now, well, wait a minute, I know a friend who bought a van and wrote it off his taxes, or bought some guitar equipment and wrote that stuff off. There is a way to do that. It's called depreciation expense, and I'm going to show you how to do it in these videos. Okay, so in the next video, I'm going to list a lot of great examples of tax-deductible expenses that you might use in your own business.